Welcome to the Hot Topic Briefing Payment Regulations, brought to you today by Emerging Payments Association Asia. We are the industry for the Emerging Payments Trade Association across Asia Pacific, running events and projects on a member collaborative basis. My name is John Ryan and I'm the Director General for the Emerging Payments Association in Asia. And I'm joined today on the line with my co-founder, Camilla Bullock. Today marks the inaugural event for our project regulation, which is a member project that is aimed at looking at creating a watch list, a priority watch list for payment regulations across the Asia Pacific region. We'll publish that watch list on our website each month, and we have a regulatory member working group that will be reviewing that list, marking up the status of the particular regulation, current and future, and if there's any action required on our part. If anyone on the line wants to get involved in this member event, then please contact us on the email address on the back slide, which is info@emergingpayments.asia.org. Today we will have a couple of polls during the event, so watch out for them. And you will have the opportunity to ask some questions, so please feel free to enter questions on the Q&A screen entry. I'm going to hand over now to John Byrne, who is the CEO of Correlytics. Correlytics are a member of the Emerging Payments Association Asia, and they're one of the world's leading providers of regulatory risk data. They have an AI-based cloud platform that is collecting and managing and presenting that data in a meaningful way to the users. And they are collaborating with the Emerging Payments Association around a payment tracker to look at the payment regulations in Asia. So John is also joined with a panel, and I will hand it over now to John to introduce the panel and to start proceedings.
Okay, thank you very much, John. And firstly, I'd like to thank the association itself and yourself, John, for inviting me here today. As John said, my name is John Byrne. I'm the founder and CEO of Correlytics. Correlytics works in the regulatory risk intelligence area, really throughout the financial services domain. But obviously a big portion of that is looking at payments and the associated infrastructure with that. If you look today, we're very fortunate to have three experts with us, and I'll talk about that in a second. But really, just to maybe set the scene from my viewpoint, I've been a fintech vendor for over 25 years. And I would have seen the continuous growth of the financial services industry from the early 90s until 2008. And a seminal moment for me was being in Sibos, because at that stage, most of the banks were the big players in payments. In 2008, the day Lehman Brothers went down. And it really changed the banking industry in particular, but also financial services forever. Now, leading up to that point, you had phenomenal growth in financial services. It became a bigger and bigger percentage of GDP every year. And really post the crisis, it started a completely different regulatory landscape, both in terms of the scope and volumes of regulations. And really for all aspects of financial services afterwards, the regulator became the number one stakeholder in terms of what they were doing. Now, if you look at our company today, we're really looking at solving a lot of the problems when you have a heavily regulated industry. But really, one of the great things about the payment sector is its growth. However, as that growth is taking off, and Asia is a particularly good growth market within payments, it's become a very big activity in its own right. And I think we're really now at a point where it's become, it's a vital piece of utility, just like the way banking was in 2008. I think it's now at a point where the interest that regulators have in this industry, A, it's not going away, but B, because of the systemic importance now of payments, it's actually going to get bigger. And it's also complicated as well, because a lot of payments, particularly when you go from one jurisdiction to another, are going to give you lots of classical complexities. So the bottom line is, because this is now such an important industry, and because it's systemically important in its own right, it's going to get more regulated rather than less. And the scope of those regulations are going to move from regulators, for example, just being technical providers of transactions, into areas of operational risk and financial risk. What happens if a payment provider goes down? What happens if a systemically important payments regulator goes down? The banking industry only 10 years ago went through the same process, and it actually changed the regulatory landscape forever when it did. Having said that, this is an industry that's going through enormous regulatory change between, for example, European-driven payments directive, between colourful things that are happening within Europe, for example, in terms of Brexit, lots of initiatives in different parts of Asia, on Australia, and in addition to that, I think regulators are going to start reacting to some defining events that I think have happened this year. Later on the panel, we're very fortunate to have with us Grace Chong, Nelixa Delvukia, and Marcus Wolslav. And they will have each of them will have a very interesting perspective on how they see the bigger regulatory initiatives and impacts in their own respective marketplaces. So what I would like to do fairly shortly is just go through each of the different speakers, and then afterwards we'll come back for some fairly, hopefully, lively questions and discussions, and then apart from the votes that we're going to have, and then there will be some time for some questions from the audience as well. Before I go, I really think that really summing up, as I see the regulatory challenge, it's looking at the pace of regulatory change. How are firms going to actually keep up with all of those changes? How can they actually spot them? Are they going to miss something? Then more fundamentally, what regulators directly apply to you as a firm, and then what regulators apply indirectly, because there are lots of complexities where you may have an indirect exposure to a regulator. Then, and very much what we're very much concerned with, is connecting the regulatory demands and the demands of the regulations themselves to the operations of the firm. So it's one thing a firm, from a legal point of view, understanding a regulation. It's a totally different challenge to actually operationalize that within a firm. I think that's something that we can also touch on. And a number of our speakers today are also very interested in looking at best practice. So what I might actually do after that introduction is hand over firstly to Nelixa, if that's okay, for you to introduce yourself to the audience.
Thank you, John. I'm Nelixa Delvukia. I'm the founder of a regulatory consultancy called Payments Solved, and before that I was head of regulatory at the UK Open Banking Implementation Entity, and also the policy lead for all payments matter at the FCA, and I was also on secondment working on payments related initiatives at the European Banking Authority.
Okay, thanks, Nelixa. Marcus, would you like to introduce yourself?
Yeah, thanks, John. So Marcus Watzlaff, I'm here doing regulatory affairs for the Emerging Payments Association Asia. My history is in banking, regulation, and insurance companies before touching base in the payments regulation and compliance. My perspective is across Asia, but predominantly based here in Sydney, and we cover everything from payments to open banking throughout Asia for the Emerging Payments Association for our members, and we provide services to our members in relation to regulations, pending regulations, and compliance as it arises.
Okay, and lastly, Grace.
Sure. So I'm a regulatory specialist in Simmons & Simmons. So I focus on regulatory changes throughout Singapore, Hong Kong, and the Greater Asia. So in my background, I started off in the Monetary Authority of Singapore. I was there for 5 years, and I've been in-house as well in HSBC in Hong Kong. So I've been working across both countries and also looking at payments in particular, supporting payments players with their launch of products and services in Asia, as well as digital assets and blockchain related services for banks, as well as starting exchanges, brokers, and issuers. So I've been seeing a lot of changes in this space, and I'm happy to meet all of you who have dialed in today. Thank you.
I think John Ryan, you were going to set some questions now.
Yeah, I'm just hitting the button on that now. Thanks. I'll just do the first one up. So yeah, if you would just like to, this is just a quick warmer upper, and just to get a sense of if payment regulations in Asia Pacific are keeping track with the pace of industry change. Great. Okay, I think we'll just we'll close that one off there now, and then we can share results on that. So just quickly, just to give you a feel for that. So yeah, this does seem to be a little bit of concern about the pace of change of the industry running ahead there. So I'll just mention that one to you, and I'll take it down now so you can continue on with the debate.
Mm.
Okay, I think Nalixi, you were going to make a number of points about the industry, and particularly, I think, looking at a divergence between Brexit and what's happening in the rest of Europe.
Yes, of course, absolutely. I think it's important to remember that Europe and the UK has been supporting payments regulation for quite a long time with the first electronic money and payment services directive. And those were sort of important because they created these institutions of payment institutions and electronic money institutions that have paved the way for everything that we've seen since, with the revised PSD2 taking effect obviously a couple of years ago. And there's also a lot going on in the payment space at present in Europe and in the UK. At a European level, there's actually a consultation out, it may actually have closed recently, looking at a retail payment strategy. Aligned to that, there's also a proposal for the Digital Services Act, and there's also a consultation that's closed, and we expect some feedback on that in the autumn about the regulation of crypto assets, which would also include cryptocurrencies and payment mechanisms. And I think that there is obviously a line to that, a lot of thinking going on these days about the impact of initiatives like Libra and how that could impact payments domestically and on a global level. And then if you come to look at what's happening in the UK, the FCA has obviously been consulting on open finance. that was a consultation that has been delayed slightly because of COVID, but we expect some movement on that in October. There's also the fact that the UK is in the process of having new payments architecture, has introduced confirmation of payee, and also has a review of the payments landscape that's being carried out by government, which is actually going to look at the state of payments regulation in the UK and actually the roles of the different regulators, because we do have a number of regulators in the UK that have oversight in the payment space. So there is a lot happening and a lot coming down the track. And what's going to be really important is how aligned all these different initiatives are in creating a holistic framework for payments.
Okay, very interesting. And then maybe Marcus, do you want to comment on?
Yeah. So I mean, it was a very interesting. It was a very interesting poll result because I suppose it does depend on where in Asia you are, because in terms of what Nelixa has just said, the approach down in Asia is very different. So I'm speaking to you from Sydney now, but let's just say we have people at different speeds. So take Singapore with the MAS, Payment Services Act was introduced at the start of this year, in January the 28th, a very important piece of legislation from the regulator in terms of the regulated activities within payments. You know, it brought in two approaches, which perhaps Grace can speak to later on, but you know, there's a lot of changes and intricacies in there for a lot of certainly the EPA members, you know, dealing with their licenses and in the payments licensing regime in Singapore. You take that approach from the MAS and you compare that to, say, the Australian approach, which is somewhat different. We have got an open banking regime of sorts with the consumer data rights legislation that you know, that's been being evolved through the Parliament from 2017 to the present date, and that's brought up its own challenges for payments providers and paybacks within this regime. You've got different changes as well. You've got, you know, if you're dealing with payments of a direct debit or subscription nature, you know, there are changes there in respect of, you know, consumer rights and consumers ceasing those debits. And you swing around into the Hong Kong scenario where there are changes, you know, with regards to how payments is regulated within Hong Kong. So it is not a one-size-fits-all approach across a diverse payments set of jurisdictions that we have down here in Asia. And so it's not as simple as, say, the PSD2, as, say, a finite regulatory regime as you have for, say, open banking in Canada. So it's interesting poll results, but again, is it taking shape? It's taking shape, but it's at various different speeds depending on where within Asia you are. Back to you, John.
Okay. Thanks, Marcus. And Grace, I might come to you in a second because I know you're specifically interested in Singaporean and Hong Kong regulations, apart from other jurisdictions. But do you want to talk about how you see the regulatory developments from your perspective?
Sure. So I've been focused on this area, and I really see that there has been quite a sea change when you're really looking at how payments regulations have developed in this region. So I think just now it was mentioned about the Singapore Payment Services Act in particular, which is really quite something which is very extensive in itself, extending across activity-based regime, and in particular, merchant acquisition was caught as a regulated activity. Digital asset digital payment token services. That was also a new activity to be caught in the region, because previously this was unregulated and really fell within the gray area of regulation. So there has been quite a change in also how the licensing process takes place for different types of licensees. So previously, I think most of the licensees would fall within certain scope of exemptions. So normally when I assisted them for stored value facilities, for example, the level of compliance or the level of expectations was quite different compared to what is expected under the new regime. And just to give an example, for example, the digital asset token aspect, I think it started off a few years ago where the regulator, the MES in particular, said that this was going to be an AML focused regime, and we took it in the part that the fact that they focus a lot on the Financial Action Task Force requirements and the high risk flag for digital assets. But if you're looking at the most recent consultations under the PS Act, the most recent responses and the guidance from the MES, we have seen that basically the type of regulations have expanded to include different types of safeguarding considerations being considered, the operational aspects going to tech and cyber risk, custody, and a lot of elements which are not as typical compared to what the payment services providers used to face some years ago. And in Hong Kong, we are also seeing greater focus, just like the guidelines for introduced for stored value facilities, which is a lot more extensive than what used to be in place for the regime prior to that. So I'll stop there because, you know, I would love to give the other participants of this call an opportunity to share more about their jurisdictions which they're looking at as well.
Okay, Marcus, do you want a final comment on that?
Well, Grace brings up a very valid point, which is, you know, the MAS have within the Payment Services Act encapsulated, you know, quite a lot of activities, and in some other jurisdictions, take Australia, in some cases it is disjointed. So we have our Australian Information Commissioner to pick up certain parts of the regime. It's not a one size fits all. It's a very different regulatory set of activities in Australia, and it's dealt with differently in some cases by different regulators, whereas in Singapore it's sort of more or less all joined up. That is not the same approach across Asia, where you have in some jurisdictions different regulators, and so for a payments company, for a fintech provider, it's very, very difficult to have a one-stop shop approach to payments. So they virtually do need to know their licensing regime, you know, in all of the jurisdictions in which they're operating, and have that front of mind, you know, when delivering product, when delivering services, when delivering, you know, in some cases payment sponsorship and merchant acquiring pieces to other providers. It really must be set in some degree of forethought how the activity that they're conducting is going to be regulated, and what sort of licensing regimes cover their activities, so that they can provide full service across their client base or providers. And I would also make the additional point is that, you know, you do have AML requirements, you have different customer due diligence regimes and different simplified customer due diligence regimes on top of those licenses. So when you're approaching different markets, you know, not one market is the same for payments. You know, if you're dealing into, you know, Japan or Korea, it's a very different, not only a different set of APIs and a different set of apps, but it's also a very different set of licensing, coding requirements, and underlying compliance requirements, to the extent that AML is not often joined up within the same set of payments regulations. And so you do need to be on top of the compliance activities under which you are being regulated within the jurisdictions or markets that you're participating in.
Yeah, I mean, just I think this is a very interesting discussion. We were going to have another question, but if it's okay, I think we'd just let this conversation roll, because I think, Marcus, you bring up a very interesting point, and it's also the degree of fragmentation in terms of regulators within the payments area. So you do, for example, have a big amount of it is data protection, and you've got separate regulators for data protection. Sometimes different facets of the payment are covered by different types of regulators. But in Elixir, I've got a fairly off-the-wall question for you, and that is that if you look at the FCA, it obviously moved into a new building last year, and we deal with the FCA a lot, and the payments regulator is actually in the same building. And a kind of a question for you, I think there's a lot of overlap between those two regulators, but do you think the fact that they're now sharing the same building is actually providing a more coherent approach between those two regulators?
Lots of overlap, but there's also a lot of difference between the mandates of those two regulators. Obviously, the payments systems regulator is looking at the UK payment schemes and systems, BACS, CHAPS, faster payments. The FCA has a remit for the authorisation and supervision of payment institutions. And obviously the FCA and the Bank of England, talking about the different regulators in this space, have a remit for all of the credit institutions within the UK.
Yeah, obviously, because the PRA, as part of the Bank of England, is another actor in this whole space. But the point I'm trying to make is it's very typical for lots of different countries. You actually have this carved up and facets of it over a number of regulators.
Yes. And I think that in the UK, I touched upon the fact that there is this review by government about the payments landscape and the role of the regulators, because we do have the PRA, Bank of England, we have the FCA, we have the payment systems regulator. You obviously also have the data commissioner, because there's a lot of data related matters for payments now. We also have in the open banking space the remit of the Competition Markets Authority because of the CMA order. And so I think that although there is cooperation between all these organisations and there are frameworks and memorandums, I think it's really good that UK government is looking at, is this the right framework? Or possibly do we move to something that has been articulated for the regime in Singapore, where there is one regulator for payments, a one-stop shop in effect. But I mean, that remains to be seen, because that piece of work has obviously been delayed by COVID. But I think it is difficult for firms to understand the distinctions between what each regulator does. And I know for a fact that that has, challenged the FCA and the PSR on an ongoing basis to help firms understand what is the role of each individual regulator and where their roles overlap, because there are specifically, even built into legislation, an overlap in the roles of the FCA and the PSR, particularly when you look at things like access to bank accounts and access to payment systems.
Yeah, no, I just wanted to kind of, because you're both bringing it up, and I think it just adds complexity to the whole regulatory landscape, in that there are so many direct and indirect regulators. I'll give you another example is we have some clients who are payment providers who may be moving into some types of credit, and actually that would bring them into a completely different universe of regulators. So it's really just adding to the complexity. I think we can talk about this a little bit more. I would like to move now to John's next question. John, if that's okay.
Sorry, John, we have some technical issues, so I think we'll just have to pass on this question. So please.
Okay, well, that's okay. To be honest, I think we've been having a fairly good discussion here. So I'd like to get it to flow. But I also think that because payments are so global, that if one or two regulators actually get their act together and have a one-stop shop, you're still going to have jurisdictions where it's just going to be very hard to unravel the regulatory landscape. So data privacy is completely separate from financial services. It's been set up for healthcare, for lots of different things. And I think a lot of if you look in, say, GDPR rules in Europe, for example, that's just kind of not going away. And you will have regulatory obligations, perhaps under multiple regulators for that. I mean, the other thing, Alexa, just to mention is in the UK, does the Office for Sanctions Enforcement, brand new office, but its aim is to become like the DOT in the US, to actually go after or the Department of Justice to actually go after serious sanctions in the UK, because that's another part of payments, is the whole financial crime element of it, and where all those regulators to do with financial crime are. Sorry, Alexa.
Absolutely, no, you're right. And in the UK, we actually have at least 2 regulators for financial crime that affect the payment space, because we have HMRC and we have the FCA that both have a remit in respect of payment and e-money institutions. So, I think there is a real need to consider how payments regulation and the payments regulators all work together, and whether, as I've mentioned before, there should be this sort of single regulator for payments. I think that would be a difficult thing to achieve, because as we all know nowadays, payments is not just about payments, it's all about the data as well.
Yeah. Sorry, Marcus.
Well, yeah, it's a good point, because I suppose it only takes one action. It only takes one enforcement action for there to be a proposition taken through Parliament for there to be 2 regulators rather than one. So every crisis you get another regulator. That very much came into the UK from Australia. I know the conduct regulator, FCA, is very different to PRA, but what we've found in Australia here is where they split to ASIC and APRA, and has had AUSTRAC looking at AML, CTF. Everyone sort of enforces or runs activities from a regulatory project angle in their specific space, which for a bank is fine, because a bank will just create a different regulatory team, or sometimes combine the responsibilities under the one person. But for a fintech dealing with a plethora of regulators, one for AML or financial crime, one for conduct, one for regulation of a more sort of financial services license type regime, when your activities go into credit or things of that nature, to then get a different regulatory relationship and a different license, and all of the different add-on costs that achieves. There is a logical, a logical problem and possibility that you'll need to up your on costs in that regulatory resources area to deal with the different regulatory regimes and to stay on top of all of your licensing requirements. So it would be better for a one-stop shop like Singapore, but that has not happened. There's been fragmentation in Australia. There's been fragmentation, obviously, in the US, which is a long-standing historical point. But I guess we'd all like to have one-stop shop regulator. I think in practice, that's not going to happen as it has. That Grace was outlining in Singapore, for the reasons that everyone protects their patch in a regulatory space, and sometimes it does create a real barrier to entry for payments providers who are trying to get in and provide as many good services as they can in their particular niche, and they're met with a different regulatory regimes from, in some cases, totally different regulators with different remits, different teams, and it sort of does increase that regulatory compliance burden for them to continue participating in the market.
Yeah, sorry, Marcus, I tell you what I'd like to do. I'd like to kind of go to Grace, and I'd like to ask you a slightly provocative question, Grace. As a firm, we monitor regulators all over the world, and I don't really see any regulators shutting down. They may change from one form to another, but it's in fact the opposite happens. Sometimes a regulator gets split up into 2, like the FCA split up into, or the FSA split up into the PRA and the FCA. So do you think in the medium term, Grace, it's actually viable that Singapore will be able to maintain a single regulator for payments, given the complexity and all the different facets that it has to look at?
Yeah. I mean, that's quite an interesting question, John. I've actually not heard it being raised before because, so previously when I was in MES for 5 years, I was in the capital markets department. And actually looking at the makeup of the current payments department, a lot of them were from my time, but sitting within different departments within the MES, because MES does believe in that cross-practice experience, which some of their officers are trained with in order to handle different aspects of regulations. So I agree with you that payments is a very specialist area, and I think that the supervision team, based on my interaction with them, has also been having a lot of learning this area, and really looking to understand about other jurisdictions as well. In the near future, I think it's quite unlikely we see this in a different team, and the reality of it is that for payments in particular, you saw different teams in MES worked together. So for example, the fintech team, which is relatively newer, working hand in hand with the team that did the drafting, and the head officer who did the drafting was previously from legal team, for instance. So you actually have collaboration across different practices in MES, a very fluid understanding of what makes sense from a very logical point of view, and the bringing together of resources. And actually what I see a lot are also the European-based applications. For the FCA, for example, to become an EMI, as well as the Lithuanian applications and the US applications, which I get a lot because I do quite a lot of licensing in this space, and often clients send us their business plans, their applications from when they had applied for licenses in other countries. So I do see that, as Marcus has pointed out, there are disparities in this space, but I don't see that the lack of consistency is necessarily a bad thing, because I think it's just a matter of fact that different countries sometimes have different points which are pain points in their industry, or different types of ways in which payments players have developed in terms of the scope and coverage of which they cover. And because of that, you need regulation that also addresses these pain points in a very sensible sort of way. So I think in data privacy, you're right, that there are quite a lot of areas which are sometimes hard to navigate for players, and sometimes moving to countries like Thailand, Malaysia, and elsewhere, I've noted that when you do seek legal advice from different players, you might get different types of views and opinions, which is why it's sometimes very hard to just rely on general regulatory surveys, and you really need to deep dive into the impact and the scope of your business. So when we take clients along that journey, I think sometimes we get interesting surprises depending on what team you're working with at the relevant regulator. And I think as a general approach, you really have to make sure that you prepare your work well, and not to assume that anything that you have done from a prior licensing application is necessarily perfectly fit for any other jurisdiction. Even UK and Singapore, there are vast differences in how you're looking at some of the operational requirements.
I understand it. Just in the interest of time, I'm just going to ask one more question, and I think we're going to then open this up to the audience. So a question I have is that regulators generally respond to big events that happen. For me, in the last 12 months, two big events that have happened in the two providers. One was there was a provider very big in retail FX, and they had a cyber hijacking, and it put the company effectively out of operations for about 2 weeks, and they had to go back and do things manually. It was really stunning to see how such a big player could be taken out so quickly. And the second is we have seen a fairly big provider fail financially, and it kind of has reminiscence. I'm going back to that Lehman's thought that I had, and generally, when things like this happen, you can start to see operational risks that are fairly big and different types of them. So I kind of feel that we haven't seen anything yet in terms of payment regulations in terms of how the regulators are going to react to this. So very quickly, and we're tight for time here. So Nilix, in about 1 or 2 minutes, what are your thoughts on that?
John, I think that there has been scrutiny about the role of payments firms before either of these events that you've touched upon. I think that if you look at what's been coming out of the FCA, they actually set up a dedicated supervisory department for payment firms. They've been issuing consultations, particularly on safeguarding and operational risk and wind down plans. And although some of those have come out during sort of this COVID crisis, the thinking behind them would have happened before that. I think that we are going to see greater emphasis on the operational resilience and operational risk of firms. And I also think we're going to see more consideration being given to the connected ecosystem that exists within payments. If you think about the fact of, you know, how firms use technology providers, how they rely upon each other, it's important going forward, I think, for regulators to understand that an impact on one firm has a ripple effect on so many other firms in the market. And I think that that's going to be an area of focus going forward.
Yeah.
So quickly, maybe Marcus, in a minute or two, your thoughts on that from an Asia
the contagion risk that Nelixa speaks of, that is an emerging concern in this space because of the two scenarios or two live happenings, the one with the FX provider, the one with the payments provider, that of course have been well telegraphed in the news media, etc. There will be regulatory project change as a response to that. The interconnectedness of the payments industry is going to evoke a global response, and so I feel sure that this space is emerging in complexity. Some may say that is not necessarily a good thing, but it will be an inevitable response from the contagion risk that will occur out of the German provider, and what is happening in the interconnectedness and the nature of its flow-on effects. That will cause real contagion risk and will lead to regulatory projects and a merging regulation.
Okay, Marcus, just in the interest of time, because we're going to have to just quickly move on. But before I do, one last thing which is relevant to that. So, Nelixa, I agree with you. This may have been planned for a long time, and the regulators may have concerned about it. However, when an event happens, even when there's regulatory infrastructure there, you get all sorts of pressure building in terms of people wanting to do things. So the regulatory regime itself may not necessarily change, but sometimes the consequences will change. So if you look at, say, the senior managers regime, because I think it's very interesting the way the UK has, it's been the front runner on the senior managers regime. Do you want to talk about the senior manager regime in terms of the payments industry and what that might mean?
I sort of, yes, I understand exactly what you're saying, John, and I think that we will see actions taken because of what's happened in the market recently. However, with regard to the senior managers regime, as it stands today, it doesn't apply to payment and e-money institutions. But again, if you look back to the FCA business plans, there's already a direction of travel that it will be expanded, and it's possible that what we've seen in the market recently could escalate that thinking. And drive different outcomes to what may have been planned. Obviously, none of us, have the full insights into what's happening, what caused what the impacts are. But what we do have in the UK is a regulator that has actually a mandate for consumer protection, competition, and innovation, which is rare in that, other regulators around the world don't necessarily have that mandate as part of their DNA. And so I think that, we are going to see greater emphasis on regulation in the payment space because it's important. Payments are the one sort of financial services product that everybody needs, everybody wants, and it has to work well. And therefore, I think that, the focus in this area is going to increase, not decrease over time.
Unfortunately, we're out of time, Nelixa. So, Grace, I'll give you just 60 seconds in terms of your perspective.
Sure. Just a quick one is that in Singapore, the individual accountability and conduct guidelines, which are similar and based on the SMR, are likely to come into force if the MES goes forward with their consultation proposal. And so what it means is that payment services licensees in Singapore will be subject to similar requirements with regard to the fit and proper conduct requirements for senior managers, the updating of organizational charts, and the refreshing of frameworks, a lot which we have seen apply in UK for the SMR, in Hong Kong for the MIC, and in Australia under the BEAR regime. So we're waiting with bated breath to see whether it will happen, but I think it might be likely in light of recent events amongst certain payments players here. Okay, excellent. Given where we are, I mean, obviously we've gone slightly over time, just shows you how big this topic is. I'd like to take some questions if we can from any of the participants.
So John, just to mention, there's a few questions coming in there. So if I'll just quickly call them out. So the first question is perhaps the biggest elephant in the room at the European level with Wirecard situation. How will this put the microscope on regulations?
Yeah, I think we kind of addressed that in a couple of different ways. I think there's one or two panelists who don't want to specifically talk about a particular participant. But Nelixa, would you like to just quickly answer that question?
I think I go back to what I said before, that we have to wait and see. We have to wait and see what comes out in the follow-up to this situation with the different regulators, because remember, we do have different regulators involved here. We have different legal entities. We have a bank in Germany, which comes under the BaFin jurisdiction. And so I'm sure that there is a lot going on that, we're not au fait with. We have to wait and see. But I go back to what I said, that in respect of payments, regardless of this situation, the importance, I think, of payments regulation is only going to become more of a focus over time, particularly as payments become more and more global. And if you look at the discussions that are happening regarding Libra and central bank digital currencies, again, is that going to be the future of payments?
Okay, so just very quickly, John, because I think we dealt with that directly and indirectly. Other questions?
Sure. So here's a specific one. Would the panel agree that the apparent move away from the unitary FSA-style regulation to a balkanization of regulation has been a false step, making life increasingly complex, especially for consumers? Okay, can any one person just answer this question quickly? Yeah. Again, I think it's something we touched on earlier.
I think,
Marcus, or just quickly, a 30-second answer.
I don't think it makes any difference to consumers. The right thing is that whoever is the regulator, consumers are adequately protected. And in this country, as far as consumers are concerned, you go to your payment provider if you have a problem, and then you have FOS jurisdiction.
Great. So which jurisdiction is doing regulation well and why?
I would say that, not to name regulators in particular, but I have seen that regulators which are more open to discussing certain issues and following track of where the industry is going and being open to that debate with participants, and that are more willing to have cross-border coordination sign agreements, to share information, to work together on enforcement trends. It makes for better regulatory support and cross-border enforcement on issues and matters. And I think that is likely to be the case going forward. So for example, for a very quick one, under securities, you have the I-Score MMOU. For payments, it has been pretty much ad hoc with regulators working together on on the basis of their relationship, but it's quite likely that we see something more formalized going forward.
Yeah, I mean, the only thing I think is that regulators have a mandate. That mandate doesn't necessarily come from them. They have to work on it. But I think what is very interesting is two regulators come to mind that have an innovation mandate as well as everything else. So the FCA have one, as Nelixa mentioned, and also MAS also have a big commitment to innovation. And I think that slightly changes the brief of the regulator. But again, fundamentally, it actually, all the regulators actually have effectively a charter. They've been set up to do something, and it really depends on what their focus is. John, have you any other questions?
Yeah, just two more quick ones. How can smaller companies or tech companies remain compliant with limited resources?
Oh, buy our technology. That's a simple answer. Okay.
Go ahead, John.
No, that's sorry, please.
Oh, I was just about to say that I work with one of my fintech company clients in Hong Kong, and they started out with a 4-person team trying to do stock value facility arrangements, and how do you do effective KYC and all that, right? But they really worked from the ground up, utilize technology, clever technology in the way they were screening and categorizing participants. Technology once again to capture an effective CRM, and today they have grown remarkably. They're doing they have multiplied in terms of their business as well as their resources. But I think right now at this moment, if you're a small technology company, you should be looking to capitalize what you can do with that small team and capitalize on RegTech solutions as well as new CRM technologies in this space.
Yes, and if you could just permit me, John, I would say that you need to be adequately resourced for the types of activities and the licensed requirements that you're wanting to undertake in the various jurisdictions or markets in which you're trying to onboard customers and products. And so any tool or diagnostic resource that you can use in that regard is sort of will be worth its weight in gold.
Yeah,
I think that's right. Sorry, can I?
Sure, Nelixa.
Sure,
yeah.
thank you. So I think this question comes up all the time, and it's really important because obviously it's a challenge for smaller companies to remain compliant. I think it's really important for smaller companies to bear in mind that even if they are a fintech or a tech company or a startup, if you're going to play in the financial services space, compliance is really important. You have to give it the same amount of importance as you're giving to every other part of your business. And so leveraging all of the RegTech solutions that have been discussed is absolutely right. I think it's easier maybe for some firms in the UK where, you have an open regulator happy to have discussions, you have an innovation hub happy to have discussions, you have lots of publications. But I think fundamentally it is really important for these small companies to give compliance in financial services the same amount of importance as they give the rest of their business.
Yeah, Nelixa, I would completely agree with that. Just one comment, and I was seriously, because I have made the leap from being a tech vendor to being a regulated firm, and I'd say the smaller you are, it's really important that you reduce the scope. If you have to be regulated at all, set up a service where you're with as narrow a regulatory scope as possible. So, for example, if you look at the FCA, some people are FCA regulated, but it's with an extremely narrow scope, and the regulator determines what you can do. So if you're a small company, make your regulated activities and what you have to work on as small as possible. That's probably the most practical approach. I know we've one last question and we're way out of time, so over to you, John.
I'll just quickly add a comment to that too, just maybe from the Emerging Payments Association perspective. We do get a lot of inquiries from fintech or paytechs around this issue. and we do actually refer them to our ambassadors or help them with a collaboration effort as well. So there is that angle too, which some of them it's a benefit as well. Just the last question, it's a little bit of a corker. If I can just read that, there is an unfair business environment, participants being treated in different ways. For example, buy now, pay later companies not being regulated. Is this due to lack of regulation being issued, or will we continue seeing more grey areas like this in regulation?
I don't know who would like to take that.
Do you want me to have a crack at it?
Yes, please.
A quick crack.
Sure. I think that these companies that provide sort of short-term credits in different jurisdictions are already regulated in different ways. I don't think there is a piece of legislation that says this is for buy now, pay later, but there is payments regulation, there is consumer credit regulation, there is other regulation that can be applicable. And what we have seen recently, I believe it's in one of the Nordic countries, I think it was Sweden, where they're actually putting in legislation for requirements at point of sale, so that the buy now pay later offering is not the first thing that comes up at point of sale. So I think underlying to all of this is the concern about indebtedness that could be occurring in jurisdictions because of these offerings, and I think that is over time going to drive a regulatory response.
Great, thank you. And I will quickly run to the line here. So what a great event that we've had this evening. Look, we kicked off with an interesting poll to learn about only 20% on the line believe that the regulator is keeping pace with change within the payments industry, and that not surprising, but it's emphatic still the same. And look, it's great to see the global perspective and the versus the UK and Asia again. It's really that helps in the learning, and it's very interesting again to hear about Singapore and Hong Kong and the developments there. And Marcus, I know, is going to be taking away this onto the regulatory project that he's leading. We will have our first working group for the project on July 22nd. So if you want to get involved, please send your email into the info email address on the screen. When EPA runs events, we do give back for our education to those who are less fortunate. We give 120 days education through our donation through B1G1. A recording of this event will be made available on LinkedIn as well. So in the next couple of days, you'll see that come out. We'll just do a minor edit. Finally, I want to thank the team at EPA for helping to put this event together and for all of our member support. Last but not least, thank you to our truly global panel, Nelixa, who is based in the UK, Grace in Singapore, Marcus in Australia, and John Byrne all the way over in Ireland. And well done to all of you for bringing payment regulations to the agenda here.
Thank you.
Thank you very much.
Thank you.
It's been a pleasure. Have a good day, everybody.